The S&P 500 continues to steamroll, mostly pushed up by Nvidia's earnings on Thursday, but can we beat 5,100? Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching this on the replay and you haven't done so, or you just found us on YouTube, make sure you hit that like and subscribe button down below and click that bell icon to get notified every time we upload a new webinar here on the channel, because you're not going to want to miss a single one, because the S&P 500 just continues to roll. Now, I've got the man himself, Riz, with me tonight. Riz, tell us. I mean, obviously, the huge move on Nvidia on Thursday really just propelled the market upward. We saw a lot of semiconductor action, but we seem to have kind of stalled out here around this 5,100 area. Is this going to be acting as short-term resistance here, or do you think that the market's going to continue to roll?
Yeah, it was a tremendously bullish week. Like, just look at that gap up. Like, it almost looks like
Massive.
it's a mid-cap stock, right? But this is the actual, S&P 500, the full market here. We did cross above 5,100 intraday on Friday. But you're right, we settled below, and 5,100 now is technically we want a second touch point of that level to call it a hard resistance. Obviously, we only gotten there once and then kind of dropped below the 5,100. So, to keep things simple, yeah, it is that kind of high, obviously, but also that potential short-term resistance as well. It looks like, this market, nothing really wants to stop it. Take a look at how many times it keeps getting overbought and then dropping a bit and then coming back up. Like, it's just the entire 2024 so far seems to be just pushing back up into overbought territory uh, again and again and again, right? So remember, we don't want to trade the RSI indicator itself, but it's important to keep an eye and understand that. Look at the momentum behind this. Look at kind of like, I would say, euphoria behind this move. Recurringly again and again and again, we keep seeing the market push up, right? And for now, it's one of the reasons why I haven't really gone and said, okay, I'm gonna short this market, or I'm gonna, take puts against it or something. I haven't done that because you don't want to try and stand in front of this and get steamrolled, right? We need more confirmation, and this, trend line you drew, I mean, it's even exceeded it, right? Take a look at the
Yeah.
velocity. It's like even kicked off away from the trend line. So it remains to be seen where we go coming up in March. But for now, this semiconductor move has just propelled uh, the entirety of the stock market ahead continuously. And the semiconductors, when I say that, I say predominantly due to AI related demand.
Yeah, I mean, with the whole thing with AI, I mean, everybody's talking about it. It's the new hot buzzword. Before it was blockchain. I remember back in the 20 teens when all it was you say blockchain and your earnings just go to the roof or go to the moon, and now it's all AI. But you know, we haven't really seen any big moves in AI lately. I mean, sure, Chat GPT is cool, and they're doing more stuff with like image development and things like that. And I'm not debating whether AI is here to stay. It's obviously going to be a thing, but I mean, we haven't really seen any big moves, but yet the market just keeps running on it constantly. I mean, can it maintain this momentum?
Well, yeah, the reason we've seen a lot of investments in AI, right? So like we've
Okay.
got pretty much every company having an AI component. You've got, like Tesla and Facebook like buying billions of Nvidia products, right? Meta. So it's crazy, right? It's amazing how much money is piling into all the semiconductor companies, predominantly Nvidia. Nvidia is the leader in this and has been, as you can see with the enormous rise from 2024. Like the start of the year, it's insane. Like, this is now a $2 trillion company um, in one of the fastest, 1 trillion to 2 trillion moves I've ever seen. It's almost like it's like, candy almost, like it's just like monopoly money just going up and up and up. But here we are, it's definitely something to stay, like that's going to stay. Like you said, there's use cases unlike blockchain. Again, the crypto diehards are going to jump on me, but unlike blockchain, there's a use case for AI. We see it. People are either using it um for all kinds of things. Now, am I a big fan of kind of like the chat GPTs and whatnot? No. But it kind of tells you, like, from a foundation, from a everyday usability, it's there, right? What the fuck are we using the blockchain for? Like, maybe in some institutional settings, maybe in some guy's basement, he somehow thinks he's the blockchain overlord. But other than that, there's no fucking use case. At least people can see ChatGPT, get on there, ask a question, be like, oh wow, okay, like people are using it to study, get notes, people are doing all kinds of things with it, and that's just the baseline, right? Just recently, last week, OpenAI, the kind of like the big daddy of all of AI, really bringing it to the public sphere, with ChatGPT. They just recently announced and released Sora, which is their text to video AI feature, right? So it's not public yet, but it has opened up to a few people. Um, and it's impressive. Like, you just type in, like, uh, a cat or a dog running in the field, and it will come up with some extraordinary results. Like, it's uncanny and kind of scary, to be honest, because if it wasn't obvious already, you got to be so careful what you see nowadays, in terms of videos and, like, stuff going on around the world, because a lot of it can be deep fake and just edited and whatnot. And this just makes it even more so because it's like so easy. You just type in what you want the AI, the program to create, and it does so with spectacular results. Like, I've seen some, because Sam Altman, the um, CEO of AI, OpenAI, like he shared some like results, and it's extraordinary what it can do. So that news just dropped, but ultimately, uh, this entire thing is contingent on uh, large institutions and spending massive amounts of money on chipsets and servers, and hence Nvidia is the biggest benefactor. There are other companies too, but Nvidia is definitely the biggest benefactor of it all. And we saw that in their earnings, right? Tremendous earnings again. They've been on a massive run. These surprises don't do it justice. Like, in terms of the revenues that they're doing is significant over year over year. It's like, wow, like, for a company this large to be able to do that is tremendous. So I'm not taking anything away from that, but it's not sustainable to keep doing that, right? So I feel like the market has effectively dogpiled into this. Everyone's rushing in to flood the gates of whether it's asset managers, institutions, even retail. And then we've seen how this works, right? It gets too frothy, too crazy, and then eventually, reality kind of sinks in. And I'm not saying Nvidia is going to, like, 300 or even 400 anytime soon, if at all. But this is a bit too frothy now. It was already frothy, so I think, even around 600, 500, I get it, which still puts it at a one something trillion dollar company. But here at these levels with the market cap it is now, it's just not sustainable, in my opinion.
No, it's a good point. That was a hell of a move. Let's keep moving here. Let's talk about the different market sectors and what is going on so far. So we finally have a couple months worth of data, almost two. We're coming up towards the end of February. It's kind of scary to say that. And obviously, tech and communications really benefiting from this move. We can see here the Nvidia earnings really pushing that sector up higher. Communications a little bit less so, but communications is still the top dog here at over 10% on the year. Tech following close behind at 9.5. And then there's the S&P 500 up almost, or just a smidge over 7.5% on the year so far, and we're only 2 months in. So I mean, the S&P 500 is just a steamroller right now. Those that are still above zero but underperforming the S&P 500 is basically everything else. Financials, healthcare, consumer staples. We've got consumer discretionary, energy, and then of course those under the zero line are going to be utilities and real estate. Riz, I mean, obviously, with only two sectors, outperforming the market, it's clear that, tech and communications are yet again propping up the market, really kind of pushing it skyward, for lack of a better term. Is there anything that, should really kind of give us pause here, as far as, having a more bearish stance like we've talked about before? Is it time to, just take the risk off and, to the moon, or should we be a little more cautious?
I would recommend caution. I would recommend not getting sucked into FOMO. Like it's okay to have open positions, but I always say if you have profits, you want to make sure you're, I would say, protecting the gains. You don't got to just, as soon as you get some little bit of money or a trade goes in profit, you take it off right away. I'm not saying that, but you make sure that you don't let those profits slip out of your hand, right? And for the positions that people are carrying and they're maybe not in the green on yet, it's not like, oh, okay, dump them, dump everything. It's not like that. Depending on obviously the stock, the sector, there could be more upside. But I'm not going out there still. I feel like these cycles take time, right? So I'm not going out there and just like buying everything, but I'm also not going out and shorting everything in sight either. And these cycles, like I said, can take time. Things move slower than we think. So when I say I'm a bit bearish, leading bearish for the year, it's open to interpretation, but I always say don't simply just box my thesis into saying like, okay, well, he's bearish, so like, all right, everyone, close everything, start shorting. No, I'm bearish.
Short it all.
Yeah, I'm bearish from a standpoint where I think the markets are topping out. I think, we're kind of just gonna gas out here, and then eventually, it might lead us lower as we get through the year, and that could be not only from a technical standpoint, but also due to macro economic circumstances as they kind of shift and move. And of course, we're gonna get a better idea as time goes on because the data is always coming in, either, on a monthly, quarterly basis, right? So it's going to be interesting to see. It's always a moving goalpost. It's always kind of like this moving target, I should say. And I don't like to I don't like to say I'm all in short or all in long. I never do that. I believe on erring on the side of caution. I'm more conservative in that sense because it's just my style of managing capital. It's not just about chasing gains or anything, right? But I operate that way because I have the experience and the capital sides, right? For others, they may need to turn the risk on a little bit more because, their capital size, their timeline and their risk tolerance might be different.
Absolutely. Everybody's situation is different. And just because Riz takes a position in one, security doesn't necessarily mean it's the perfect position for you. And we've got one of those positions. We'll talk about that in a little bit. But let's talk about the asset classes here. And now, I find this oil chart incredibly interesting right now. So, I mean, obviously, we are grinding up. We've got, an uptrend going here. And as you all know, my lines are nothing short of prophetic. So, be aware of that until, of course, oil goes against that. And then I'll say that, it's time to change the trend. That's how these things work. But really, what we're seeing here is really just a slow grind on oil, kind of moving upwards just a little bit. Looks like we closed here. Let's see, right around 76.49 per barrel on Friday. And, Riz, I think people are very surprised by what's going on with oil. I really think that they thought that, and I'll admit I was kind of this way too, that there would be a lot more, volatility in the oil markets, based on a lot of things going on around the world, everything going on in the Middle East, in the Gulf of Aden, things like that. And of course, there was a sinking there just recently with all the things going on, and yet oil seems to really not be reacting so sharply, not like it did back here in 2022 when there was the beginning of the big thing in Eastern Europe. So, oil really reacting a lot more slowly right now. What's the deal with that?
Yeah, definitely a lot of people are kind of I would say surprised with how slow or low volatility of a mover the oil has been. And you know what? That's good. It actually tells you that, the oil price is more settled in that, we won't see it maybe drop below 70. I think the more time that an asset or a stock or anything really has to kind of consolidate and move in a little bit more measured manner, the more it tells you that, okay, it can hold these levels. The problem comes is when it goes to like 75 to like 100 in a span of a week, then you know like, whoa, okay, yeah, it's volatile, but the chances of holding those levels are less when it moves that fast. So I feel like the fact that we're getting into the spring months coming up, obviously, once we get past Q1, we do know that it's a little bit more of a demand time for oil, the summer seasons, and of course that's not surprising to anyone, right? So a lot of it. I wouldn't say it's like, okay, well, summer comes in, oil prices are going to pop. No, a lot of it starts getting priced in. But I feel like the market is kind of holding firm, and there's a lot of bearish bets that have been on the table for the past year on oil prices, and we're going to see how institutions and commodities trading firms kind of play into this because that's going to impact obviously the large moves, right? It's the institutions that are moving and how they're positioning themselves, how they're hedging. We have, believe it or not, a lot of people don't know this, but the oil companies they hedge their oil price cost in the commodities market, right? So oil prices move based on things like Shell or Exxon, um, and all these oil producers hedging as well. Okay, so it's important to kind of get that idea as well because a lot of people don't realize, oh, what these oil companies, they hedge themselves. Yeah, because they don't want to go through immense volatility. If it costs them $70 to take it out of the ground. They don't want to be on the hook. Maybe they can sell it for 85 or when it goes up, but they don't want to be at the mercy of the oil market week by week, month by month. So they'll hedge. So how that works is very fascinating, and that also makes an impact on uh, prices.
That's some good information I don't think you're going to find anywhere else. So if that's all you learned from this webinar, then you're coming out ahead. That's for sure. Gold, honestly, not really interesting in my opinion. We're not really seeing too much volatility there either. Gold has been very, rather stable. Now, of course, we are seeing, daily ups and downs, but mostly staying well above this $2,000 per ounce area for the majority of the year. Looks like we did dip here, last Wednesday. So, a little bit of a dip there. Obviously, people were not buying as many gold earrings on Valentine's Day as they should have, which is clearly what caused that to come down. But I'm joking. It's not really what it is. But yeah, gold really not all that interesting in my opinion. Riz, any thoughts on that?
Nope. Like you said, consolidating this 2000 level seems to be holding. If it ever does drop, then we'll see. But I don't see that happening. I think this is a solid level, especially if we see a little bit more economic data come in that's a little bit more weaker, or if it starts playing into the side of um, more volatility or there's more risk in the market or more risk off environment, we will probably see kind of gold get a little bit stronger and hold this level. But I don't see it kind of drop below the 2000 area just yet.
Absolutely. All right, let's keep going here because we got places to do and things to talk about. Let's take a look here at the bond yields. We just continue to see bond yields keep running here, and that is, on all three that we're watching here on this chart. The 2-year is still the top dog, has finally separated out from the 30. So we got a nice separation between those two. Looks like we closed the week at 4.694% yield for a 2-year bond. Well, we did see a bit of a dip here in the 30s and the 10s. So, we're seeing a little bit more of the same, kind of like what we saw last year after we got, through November here. And when we got through the early part of the year where the bond yields were really kind of fighting with each other. And then the dollar really looking pretty strong. We continue this stair step pattern upwards as things continue to, develop around the world. There's obviously a lot of things going on that I mentioned earlier, talking about with oil. And, just in general, things are very busy right now, but the dollar is still remaining pretty strong. Riz, is there anything that we need to be keeping an eye on here that you're seeing that we aren't?
No, what's interesting is, the bond yields continue to kind of remain. Yeah, we had a little bit of a drop on Friday, but other than that, they continue to be pretty strong, holding up obviously because of rates potentially staying a little bit higher for longer than expected. We'll get more color on kind of what's going to happen in the next Fed meeting. But so far, we are not expecting a rate cut in March. And then when it comes to the price of the US dollar, again, that continues to also remain relatively strong due to rates being higher and, of course, the economy chugging along nicely. The macro data seems pretty strong still, inflation coming down a bit as well. So overall, all things kind of seem like, a green light, so to speak, for things to continue how they are. The major things, the major decisions in the interest rate environment were when the Fed cuts and how much it cuts by. Those are the things that we're going to be waiting for, and the market's waiting for too, and that will kind of give us more direction on a risk on or risk off environment.
That's some good data to keep in your back pocket. Now, if you are here on our live webinar and you have a question for Riz, go ahead and start typing that now as we go through some of the key dates this week in the market. So, really nothing here on Tuesday. Durable good orders month on month. Probably not a catalyst most people are going to be watching. However, I do think that the GDP growth on Wednesday will be interesting to kind of get a gauge of how the economy is doing and kind of where we're at with that. Then on Thursday, we've got some more interesting stuff. We've got core PCE, the price index month on month. That will be a big one. Personal income and personal spending, interesting data points, but I don't think super critical. And manufacturing PMI on Friday is a non-bow. But yeah, Riz, I think this GDP growth should be interesting on Wednesday. What are your thoughts about that?
Yeah, just the second estimate. We've already had Q4 GDP numbers come out. It's the second estimate, so we always get a little bit revised up or down. Obviously, there isn't too much of a difference. Like we're not going to see um, 4% go to like 6%. Those are not what's the case. It's usually relatively the same, plus or minus a couple basis points. So with that said, the economy continues to be quite strong, moving at a slower growth rate than 2020, 2021, 2022, but still positive, right? We do know that that's not the case for all the economies in the world. Like for example, Japan went into a recession, technical recession. We know, I think it's Germany as well, a technical recession.
Hmm.
Not all the economies across the world are strong and continuing to grow, right? Recessions are a normal part of any healthy economy, but kind of gives you the context of where things are compared to the good old USA.
Absolutely. No, that is definitely important to note that there are other economies out there. I know it's hard to believe, but it's true. And it's definitely something we need to be keeping an eye on as well. Let's take a look at the earnings calendar because obviously Nvidia earnings really moved the market this week. And honestly, I'm not seeing, a huge, really big names here. There's a couple that I think could be interesting to keep an eye on. Salesforce should be a pretty big one here on Wednesday after the close. For all of you meme stalkers out there, AMC is reporting it ain't going to do anything. Don't worry about it. But for the most part, it seems a little bit cooled off here. Obviously, Nvidia was nuts on Thursday, but I'm not seeing a whole lot here to be keeping an eye on. Zoom could be interesting on Monday. We're having this meeting on Zoom if you're part of Elite. So congratulations, we're helping the economy there. But Riz, is there anything you're keeping an eye on?
No, just definitely smaller growth names here, mix of tech and others. But yeah, we got Zoom. Unity is usually a large mover. iRobot's interesting because Amazon recently was trying to buy it out, but it got rejected. Um, we have what do we have here? We have First Solar, which is solar company that's a large mover as well. Beyond Meat, obviously, we know has used to be quite a bit of a volatile stock, and that's kind of just gotten hammered over the past couple of years. And like you said, obviously CRM, Salesforce is big. We have Snowflake, another company that used to be quite a big mover. And then C3 AI is also one of those AI companies. Again, doesn't make any money. Kind of a bit of a vague company. Again, I haven't done a deep dive on it, but that's a company that used to be quite a bit overinflated last year with all the AI stuff. And this year has kind of come back down a little bit to the earth. And I feel like, Best Buy is there. You got all that kind of stuff. Celsius is what some people might be watching for those that like to drink. But other than that, you could really comes down to what what you have a position in, what you've traded before. But a lot of smaller names. By smaller, I mean like growth names. All the major big you know ones have been reported already.
And don't forget, Riz's most favorite, ticker would have to be Polestar. I know that that's definitely high on his list to keep an eye on. I'm just joking.
You know what that is, right, Chris? It's
Do we want to
so
know? Can we talk about it?
yeah, no, absolutely it has nothing to do. So Polestar is a car company. So
Okay,
what's it called? Volvo um had an offshoot of essentially they did like um, I'm blanking on the word, but they kind of like siphoned one part of the company out and made it into a public company, right?
gotcha.
So if I'm not mistaken, that's the public company there, Polestar Automotive, PSNY. So yeah, it's a holdings company for that spin-off, that's the word, spin-off
Spin off, yeah.
for Volvo's automotive arm.
Fair enough. All right. So we got some questions here from our elite members. Jeff says he's interested in TWLO, Twilio. This is a classic one. I've heard this name many a times. Looking like it found a floor post earnings, planning to use covered short puts as an entry vehicle. Should it hit around the 55 level? What are our thoughts on that? Well, yeah, I mean, from a technical standpoint, it definitely looks like, this earnings drop here. Let's see, they did well, so guidance must have not been so hot, if I had to guess, or perhaps they didn't do well enough that investors felt that it was time to sell. And so they definitely did sell off here. Looks like on Wednesday, they kind of found the floor here right around 55, 60-ish, and seems to be holding that area. So, Riz, what are your thoughts on Jeff's play here?
Yeah, definitely a good technical setup here. Definitely kind of what we look for in elite, and for those that are students, it's definitely interesting. Jeff also mentioned cash secured puts. That's also another good way, 55 level, which is definitely fine. Uh, yeah, I guess also another thing, especially now, my only concern is because the market, 5100, to give you an idea, I'm not saying it's going to happen, but to give you an idea, like if we see the market pull back 200 points, okay, 200 points, go back to 5,000, not a big deal, right? In the grand scheme of things, but that will move some of the other stocks lower as well. I mean, Twilio might not move as much down as much as like some of the other overinflated, hyped up stuff, but this very well could too. So maybe we see 52 area, maybe we see 55, right? So just keep that in mind. My always, even as no matter how good a setup looks, and even if it's something like this where it looks like it's found a floor at 56, the market overall and the moves because of it can also throw a spanner in the works, right? Throw a wrench in the gears there, so to speak. So just keep that in mind. But overall, Jeff, you're all right. The cash secured put route, even from a potential long buying the stock, so long as you manage your entry and risk, yeah, definitely looks solid.
All right, fair enough. Sean wants to know, what do you think would cause pharmaceuticals to perform better or recover? Well, putting out some good drugs would be a great start, for pharmaceutical companies. That would be fantastic if they could do that.
Yeah.
That would help, in my opinion. But Riz, what are your thoughts on that one?
Yeah, so pharma is a company. Again, I'm talking, large pharmaceutical. I guess pharma is a big industry, right? So it depends on, are you talking biopharma, biotech, but I'm assuming you mean like large pharma, which, Chris has brought up nicely for us for like when it comes to PFE, Eli Lilly, you got all those, Merck, you got MRK there. You got what else? You got a bunch, right? So some have done better. Like, a lot of them have actually done good. So it depends what you mean by pharma, right? Pfizer, yeah, in the dumps, absolute bloodbath. But if you look at Eli Lilly, you look at like we brought, Merck up, like they're doing good. We had a trade in a pharma company just last week in Elite that we closed for profit, right, man? So hopefully you got in that. I'm not gonna share what that was because that's specific to Elite. But yeah, we've traded pharma with good results. Now, what I can say from a sector rotation side is when we see tech stocks and all these growth names run up, usually it ends up kind of boding a little bit more bearishly for the pharma sector, because they kind of flatline or maybe take a little bit of a dip because money flows are going into large cap tech and growth stocks, right? On the flip side, if we see these growth stocks and the market kind of maybe pull back a little bit, maybe not the market as a whole, but certain sectors like communication and tech, that could bode well a little bit for pharma companies. Okay. But you got to be selective. Like Eli Lilly, fantastic company, great company, but I wouldn't want to buy it here, right? A lot of their Ozempic competitor has been kind of priced in, right? Ozempic is of course the Novo Nordisk um, uh, product. So Eli Lilly's been working on their own, and that's really kind of brought um, NVO, I think is one. Yep. Yeah. So this has been a tremendous run too, right? But yeah, Eli Lilly has been on a run because of their own competitor to uh, Ozempic, and if it depends what you look at, right? So definitely some opportunities. We traded one pharma name in Elite last week for good profits, got out. And then I'm just keeping an eye again. Pharma is a big sector that I keep an eye on. A lot of solid names, uh, but you got to be selective.
Always got to be selective with your positions for sure and never chase. That's a good way to get into trouble. All right, Jeff wants to know about Lemonade. We have traded this one in the past. Seems to have a few recent earnings pops. Now, if I'm not mistaken, we do have Lemonade coming up this week, right? Yep, looks like on Tuesday after the close. Looks a little beat down from where we were before. Let's just zoom that out a little bit.
Yeah, just like
Yeah.
everything post 2021. This thing was a high flyer as well. So really everything has just come down. So not surprised from that 2021 level. From a technical standpoint, yes, interesting. But do you want to play the earnings catalyst? I personally don't, but for those that are feeling feisty and frisky, sure. Not my cup of tea, especially not on this, right? It could go anywhere, but this 17 $18, 16 to $18 range has been a nice consolidation range, as you can see. From a technical standpoint, it could be ripe for a pop up, right, in a rally, and that could be uh, thanks to some decent earnings. Who knows, right? So that might be the exact catalyst the market needs, or the investors in the stock need for it to get a nice push upwards. But generally speaking, when it comes to earnings, I am not too big a fan of placing a trade or entry around that time.
Yeah, it's definitely more volatile, and you just don't know what's going to happen. That's the simple truth. Now, Keeley says CRWD has had some great revenue growth. Yes, it does appear that they are running pretty hot right now. Quite a move here on CrowdStrike. Looks like we had a bit of a dip down here, got bought right back up, and closed a little bit red on the week, even though there's a lot of volatility in this one. I'm not super high on this one myself, but Riz, what are your feelings on this one?
Yeah, they've done really well as a company from a growth standpoint. It's been a growth stock. I believe it's cybersecurity type. So yeah, it's been a massive runner up, from like $100 to $300 a share, from 2023. As far as buying at these levels, personally, I would wait for a further drop, maybe below the 280 again. I would not chase this to get this run up again, because I feel like it's definitely overdone. A lot of these tech companies, growth companies, are kind of back at frothy valuations, right? As great as the company has done in terms of growth, um, it's already been factored into the price now, right? So it's always important to keep things in perspective. Even a crappy company at the right price could be a potential buy. Same way, a fantastic company at a very frothy valuation, a very overextended price may not be a good buy, even though the company is great. So this definitely falls into the latter. It's a good company, a great industry, cybersecurity, all this kind of stuff is not going anywhere. It's a growing industry. It's going to continue to grow. CrowdStrike is definitely one of the leaders in it, but not at this price, in my opinion, to buy. But would I go and short this either? No.
You don't want to stand in front of the freight train, that's for sure. Not that Riz has ever stood in front of a freight train before. Sean says, what levels would you consider a buy on QS? He feels that their tech could be huge for EVs and he wants it for long term. Well, this looks like it's been having some troubles. We're in penny stock territory here. Earnings were not too hot. Obviously, they're suffering because of that. I mean, this doesn't feel like a buy to me, but if you believe in the company and what they're doing, then I mean, for a long-term hold, your entry is a little less important. But man, I'm not really liking this chart at all. Riz, what are your feelings?
Yeah, I echo that sentiment, but the caveat is if Sean again, like there could be an opportunity, right? Like
Hmm?
this is something that is very individualistic. So if Sean, for example, you've done a lot of due diligence on them. Now I know you said just now that they're mostly doing R&D for now, but they're likely not making any money. It hasn't kind of materialize into anything, and that's fair, and that's kind of reflected in the price right now. But you gotta know, like you gotta have the conviction. Do you want to see this out, see this through? Have you done your deep dive into their financials, their product pipeline? You said they're doing R&D. Well, what are they doing R&D on? Is the stuff that they're making? You mentioned is for electric cars, like the stuff that they're doing, the things they're working on. Um, are they a leader in their segment? Are they doing good work? Is it viable? In that case, if you feel that, then yeah, I mean, you take a position, a stance on it, you have your thesis, and Godspeed. But from a technical standpoint, looking at it just from a face value, uh, personally not a fan. But like I said, it all comes down to context.
For sure, for sure. Now, if you couldn't guess from my jabs at Riz there about standing in front of a freight train, let's take a look at SMCI. So this is one of these companies here that is really benefiting off of the AI hype. Riz said he wanted to talk about this before the webinar because this is what we call a parabolic move. If you've never seen a parabolic move before, this is what it looks like. So Riz, obviously, we have been watching this one fairly closely. Why don't you go ahead and take it from here?
Yeah, so um, this is a position that we've taken a short on. I can say that publicly. Obviously, elite members know. But Chris has also just conveniently brought up my existing position now. This is my existing position as of today. I have nearly a $700,000 short position on SMCI. Okay, so just take a breather, take it in. This is the real deal. I wanted to unveil this to those of you that are loyal and been on Elite and either watching the webinars live and even those watching after the fact on the recording. So I wanted to share this with you first. Um, but yes, this is an official trade in Elite for those of you that have been paying attention. But I didn't disclose the size. I said it's a full position, but I didn't disclose how large of a position it was until now. So I think roughly 700K USD short is sizable,
Yeah, I would say so. That's a pretty big one.
right? I know some people might be taken aback a bit. It is large. I will say though, um, for elite members know my rough entry. Um, I have not publicly disclosing my entry price on here for multiple reasons, but elite members, you will have a bit of an idea. You can always ask me in the chat room, what my price is. But I will tell you that I've already made a bit of money on this, even though the trade's open. I've made a bit of money on this via hedging via options, right? Via like Raptor method and using a little bit of uh, option strategies that I teach in the masterclass. and some of this, you and Elite might will already know. Using those, I've already made probably about 30K on this trade. Again, 30K may seem like a lot, but it's a sub $700,000 position short. So it is a 30K is nice. But I do have this exposure, large exposure. So let's see how this week goes. It's going to be an interesting trade to keep an eye on. You'll get to see me make or lose money almost pretty much live for those of you that are in elite. So it's going to be interesting. And um, depending on some of the shorts that I take, they can get pretty dicey. And of course, this is by and large, hands down, the largest short position I've taken in probably ever. So it will remain to be seen if I get my ass handed to me or not. And of course, you'll know live if I um, enter, exit, whatever I'm doing.
Well, this is a great, demonstration of what a sympathy move looks like as well. Obviously, we see this huge pop on Thursday, and that's mostly because of Nvidia earnings. And, basically, this company was moving in sympathy to Nvidia. We saw this with other companies as well, like AMD,
Yeah,
where they got this pop up on Thursday and this big selling candle on Friday,
yeah.
as Nvidia kind of came down. So we're seeing that reflected here in this one as well.
Yeah, I'm glad you mentioned that, Chris, as well, because look at how big this moves, right? This is still a relatively smaller company. That's my kind of worry here because it's still a um what's it called? A 55, roughly $55 billion market cap, still small. Compare that to something like, AMD, Nvidia, and it's very small still. Even though the share price is high, keep in mind, the company is still relatively small. It's not as small as it was back in 2023, but it's still relatively smaller, right? And it's that's kind of my only concern. It moved in a sympathy move like 30%, moved up 32% on Thursday. Nvidia moved up roughly 14% on Thursday, right? So this was a significant, like large move in a day for a roughly $800 stock. So definitely not for the faint of heart. It's had a tremendous move the past month from, around 300 to now 860, even after Friday's sell-off. So yeah, I will be, uh, keeping a close eye on this, for lack of a better word.
Yeah, definitely. This is going to be one that I think you're going to be staying awake, waiting for the market to open on. Well, great webinar, everybody. Thank you for all coming out. As always, it's great to have everyone here from Elite, and all of these questions are just fantastic. Riz, what are your closing thoughts here going through the weekend, going into this week? Kind of what are your thoughts for the market and what are you watching?
Yeah, we overextended. We've seen, I've been doing this for now 17 years, my 17th year in the market now. So I'm not a stranger to seeing euphoric moves and overbought levels, hype, overextended. Markets continue to stay that way for some time, and that continues to be the case right now. I've also seen, like you mentioned earlier, like blockchain, for example. I've seen these things come and go, right? Before although I wasn't old enough for trading it, the example I can give is the kind of like the dot-com bubble, um, with the internet and everything, and that obviously was a major move for all of humanity. But and I think AI is one of those, but it's a bit too much. Even though the internet was pretty much a world-defining moment, a lot of the companies got slaughtered, right? A lot of those companies that were the leaders are no longer even there anymore. So it's important to be very, very cautious when we trade and enter any of these companies like, Nvidia and whatever. It doesn't mean they're bad companies. Quite the contrary. They're amazing. They're great. But like I said earlier, no matter how amazing a company is, as an investor, as a buyer, it has to be at the right price. Otherwise, you at some point will get um, concussed with how the market can punish those that have lofty expectations. And even though as great as they are, if they slip up a little bit, they do not meet those lofty expectations, they do get punished. And as an investor in a company that's, gone from 1 trillion to 2 trillion really, really, really fast, you best be very, very, very comfortable, holding something like that and sticking with your thesis because oftentimes, in my opinion, in my experience, a lot of people end up holding the bag, right? And I can assure you, once some of the fraud and the hype comes out of the AI sector, that's going to push down the market. A lot of the past 6 months rally, maybe even higher, is because of this AI thing. Okay. And, we're in the second year of it now. So, uh, progress is progress. There's some good developments in this space, but progress will slow down. The hype will slow down. And when that happens, you're going to see that reflect in the company earnings, in the investments in the sector, and as a result, in the hype and the price moves in the individual stocks.
Very sound sage advice there that everybody should be heeding at this point. Thank you again, Riz, for coming out. It was great having you on the webinar. As always, your insights are always very on point and very meaningful and very practical. So really appreciate having you here.
Pleasure is mine. Thanks for having me.
Of course. And as always, we'll see you in the market on Monday.